Welcome to the Small Caps Podcast. I'm your host, Philip Carinya. Today, we're going to be talking about the blockchain and cryptocurrency space. There's a lot happening there at the moment, particularly with Bitcoin. So I've decided to bring on Executive Director of the ASX listed company DigitalX that operates under the ticker code DCC, and that's Leigh Travers. Leigh, thanks for joining us.
Thanks, Philip. Thanks for the invitation, and happy to talk about blockchain and digital assets. My favorite topic. So, great to be here.
Fantastic. Now, interested to know, because a lot of people are still, they've heard about cryptocurrency now, they've heard about the blockchain. There's some that have been getting involved, some that are still on the sidelines. Before we get into all those topics, how did you first come across this technology and get into it all?
Interesting. Yeah. So, a lot like probably a lot of the listeners here, my background is with small cap listed equities. I was with Euros Securities, which is a listed wealth management firm, for 7 years. And it was round about the 7th year that I'd been there. We're providing advice and corporate services for companies between around 50 million and 2 billion. And I did find that a little repetitive. Maybe it was the 7-year itch. Maybe it was the sectors we were focused on. But I started to hear from my friends and family about something called Bitcoin. It was a new global currency. It was really interesting in that there was only a finite supply and there was a growing amount of demand globally. So that obviously piqued my interest up as someone that looked at assets and looked at investments, and could see something that was at a relatively early point and did have a pretty big future. So I really just jumped into it every day on the day to work. On the way into work, I was listening to a podcast about what it was, what the industry was, how to get involved. And at the same time, there was a listing going on for a company called DigitalX, which I'm now executive director. And that company was going to be the first blockchain technology company to list anywhere in the world, initially as a major Bitcoin miner. And I was told how, blockchain was able to revolutionize the way that payments are made and the way that banks currently extract just so much value, around $1,000 per customer of value each year. And that's just due to them being a middleman, them being in that role. But blockchain could manage that safe transfer at a fraction of that cost, and at the time that was typically taken to do these transfers. You could also set up an account extremely quickly. And I was pretty much sold. I wanted to be a part of that firm and what that was doing. And it took me about a month, and I joined DigitalX.
Yeah, right. And just to paint the picture, because now I guess people have seen that big run up in the price in cryptocurrencies in recent times. It wasn't always the case. So what was the scene like when you were first coming on board with DigitalX? Like, I mean, maybe if you can remember the Bitcoin price, maybe that gives people a bit of a yardstick of how far the technology's come.
Yeah, so my first role at DigitalX was prop trading. So trading our Bitcoins for profit, as well as supplying those Bitcoins we received from our mining operations to some of the early institutions and some of the exchanges. So yeah, I was actively trading the Bitcoin price every single day. And it was not a one-way street from $10 to $10,000 where it is today. It's been one of the most volatile assets out there. It was around about $500 to $600 US when I first started, and it basically went down 2 years straight. It was a very tough period because 2013 the price had gone from $10 to 1,000, had brought so many new investors in, had brought a lot of new infrastructure in, and it had changed so substantially from being basically a background of just cyber geeks to now having a mix of investors, product builders, and cyber security and cryptocurrency individuals. So it was just a real good mix. And based on that sort of build, you would have thought that the price would have had a pretty consistent growth. But no, it is a new asset, and it has been relatively volatile. So it was a very tough period. There was still a lot of detractors during that period, and to see the price, flat or fall to, I think the lows were around 180, was tough. It was tough to keep believing and sort of seeing that there was a significant upside for it.
Yeah, well, there's certainly no shortage of believers when the price started taking off, and I think as people are starting to understand what blockchain technology is, people they're starting to understand how, what the benefits are over, let's say, traditional currencies that we use today with the fiat currencies. Is that something you could talk about in terms of like what blockchain technology is and how it's set up as to operate a currency that may be better than the one we're using today with the fiat currency system?
Yeah, definitely. So the way that I see blockchain technology, it's a digital ledger. So you can have anything you want on that ledger. The most popular use case is currently Bitcoin as a currency, but you could put real estate assets on there. You could put diamonds on there. You could put shares on there in the way that ASX is doing with their settlement and clearing operation with digital asset holdings. There's a range of different assets you could put on there, but understanding that blockchain is just a digital ledger with a consensus protocol, which just means there's a group of actors that are able to determine, what is true, what is the true state of events, and what's a true transaction, and having that additional security from that. That's probably the most important thing to understand. It's similar to using Excel, except you've got multiple parties approving transaction and keeping the security of the network.
So is that would you explain it as this whole? I've heard it described as being the three types, which is distributed, decentralized, and centralized. In terms of, let's say, the current currency systems we use today, like with the Reserve Bank or the Federal Reserve, it's a very centralized control of money and the way it operates. Whereas the Bitcoin or the blockchain operates on a distributed ledger. Is that how it works, or how does that operate?
Yeah, so the way to describe it, the distributed ledger, is just that there's multiple servers around the world. I think with Bitcoin, there's around 40,000 public servers or nodes that all have a copy of the ledger. So that means if you were to have some individual actor or group of actors trying to change the state of events, they have to simultaneously change all those 42,000 servers or nodes at the same time to be able to do that. So it just provides so much more robustness and security over a centralized ledger, which has that honeypot. And we have seen some of the largest companies globally hacked, and it's caused a loss of privacy and a lot of user data, bank details, and it's had some pretty catastrophic circumstances and issues associated with that. So having that decentralized and distributed nature is one of the qualities of blockchain and Bitcoin in particular.
Yeah, absolutely. And when you actually start using it, like you got me to download, what was it? You got me to download some wallet the other day, and I've been having to play around with it. And I've been buying some Bitcoin lately. So full disclosure, not that that's going to impact the price, I don't think. But when you start using it, it's actually not too dissimilar than what we're using now. Like when I pay a bill now and I'm putting in BPay numbers and BSB and account numbers, it's not too different. Like in terms of people making that step from what we use currently to interacting with these cryptocurrencies, it doesn't seem like it's that big a step. Would you say? Like
No, I would say it's a very easy step to get involved. I sent you a wallet to download Edge just before the call. I sent you $20 just so you could play around with it.
Sweet.
Yeah. So that may be something you can spend online buying some electronics, or maybe something that's worth a lot more in the future. Who knows? But I think it's probably the best way for new entrants to the space to understand it. Just buy a really small amount of Bitcoin and see how easy it is to use a wallet, to make a transfer, to buy something online, how quickly it confirms. That's probably the best way, and that's sort of how I learned about it. In terms of maybe like a business banking account, how difficult that is to set up and to make a transfer, that you can apply the same sort of security and procedures to Bitcoin wallets as well. So you've got multiple parties to sign a transaction, and that sort of provides that security you want and governance you want from having and holding large value assets on that Bitcoin blockchain. But yeah, in terms of opening the accounts, it's a very, very simple process, very quick process, and extremely low cost. If a user in another country that didn't have access to banking because they only had a small account, couldn't get access to banking, a Bitcoin wallet's the fastest way to get into the financial ecosystem.
Yeah, absolutely. It's very simple. And thanks for the $20. I'll hold on to that because who knows what it'll be worth in a while still. And even when I was buying the Bitcoins recently, it was very simple. Like it links to your bank account, very easy to go through. Although I must say the NAB blocked me from my account because they thought I'd been hacked. That
Oh no.
I was buying Bitcoin. So maybe the banks are trying to stop the money getting out of their system into this new one. But speaking of the currencies, how does it work in terms of let's use Bitcoin, because there are many cryptocurrencies available, but Bitcoin being the main one. How is it decided, like how many Bitcoin there are and who creates them, and how does all that work?
That was all originally designed with the launch of the protocol. So that was 2008. It was created 2009. It was launched by an individual or group of people that were named Satoshi Nakamoto. So that full design was coded into the Bitcoin protocol in terms of there'll only ever be 21 million Bitcoins, and the way that they're distributed into the market over time from now until 2134 is via a fixed schedule. So it's every 10 minutes, new Bitcoins are released into the market, and they're distributed to miners. So those computers that are providing security to the network, they get rewarded with new Bitcoin. And that schedule of distribution actually changes every 4 years. It's not linear from 2009 to 2134. It halves every 4 years, which is quite interesting. And some are, I think, saying today that might actually contribute to some of the boom and bust issues with the Bitcoin price, in that on the year after the fourth year, the amount of supply that is hitting the market has changed quite dramatically. And if you have a price or a demand, that is either constant or increases, you'd expect supply demand economics would see a kick in the price because of that supply schedule that is native to Bitcoin.
So in a sense, it sounds like it's a bit opposite to, I guess, the way, I mean, if you look at the money getting thrown into the stock market at the moment from the Federal Reserve, they're creating money, whereas it seems like with if I got this right, in terms of Bitcoin, it's like there's less money that can be mined out of that 21 million. It's almost like an inbuilt deflationary mechanism rather than an inflationary.
Yeah, I guess if you're talking about quantitative easing, perhaps Bitcoin has quantitative hardening, something like that.
Well, and that's one of the things that got me to reach out to you in the first place, because there's one of these halving events coming up. Is that correct? On May the 12th?
Yeah, what's that, within a week now, about 5 or 6 days. So yeah, it's a pretty exciting time for Bitcoin investors everywhere right now. I saw that the average, not the average, over the last 7-day average, we've got the most number of market participants in Bitcoin since 2007. So that's active users in Bitcoin right now. So there's definitely a lot of people paying attention to it. We saw Renaissance Technologies, LLC, which is, from my understanding, the world's most successful hedge fund. They just had approval to start trading Bitcoin 2 weeks ago. They've turned 10 grand into $28 million over their sort of trading history. So pretty interesting group to join the marketplace. I think this halving event is something that saw the best 2 years in Bitcoin's history, the years post the halving, as something that's probably attracting a few new participants to the market right now.
Yeah, it's certainly one of the reasons I'll confess that I bought in. I saw it as a good trading opportunity. But and what would you say with you're mentioning, like, there's these bigger groups that are now getting involved as Bitcoin's becoming a bit more established and these cryptocurrencies in their role in society. What would you say to the likes of, I mean, Warren Buffett's making news this week with as he always does, but in terms of his investments and whatnot, and he's been a critic of things like Bitcoin and cryptocurrency, saying that people are buying them aren't really intending to use them, and there's no inbuilt value and things like that. What would you say, like, in response to him, if he was asking you, why would you want to buy Bitcoin?
I think he is the largest investor in banks globally. He's also one of the largest holders of central bank issued currency globally. So I guess whenever you hear someone talk, you always like to know what their position is. And his position's pretty public on supporting those two assets that are pretty much counterintuitive to what Bitcoin and blockchain is. So he's coming from a position, he wants those assets protected. So I can understand that message. And I think his nature is he's picked a lot of very good investments very early and held them for a long period of time. But he was also very late to picking up some of the technology investments that have done so well over the last 10 years. So from getting access to technology advice and technology investments, I don't think Warren Buffett's been the bellwether for that. And then sort of understanding his position on central bank issued currencies that are growing in terms of the issue of those daily versus something that is finite in supply, less supply hitting the market as well right now. I sort of know where I think that there'll be more interest over time. I think it's still pretty early in this asset class. There's been some notable skeptics, but it's probably more important those that have come out as being extremely negative about the asset and then have flipped to become positive. And I think the most notable of that's probably Jamie Dimon from JP Morgan, originally saying that any trader caught trading Bitcoin will be fired, to then building their own blockchain based currency, as well as building their own in-house blockchain development team, and sort of seeing how far they've come. So I think that probably speaks more volumes than those that are the negative for their own reasons.
Yeah, I'd agree with that. And I'm not the biggest. I mean, Buffett's done great, but his thoughts on the gold and a few other things I don't agree with. But that's all good. I mean, at the end of the day, it's what ends up being and what you make your money on, I suppose. But with that as well, like you're saying, there's these JP Morgans and these bigger institutions getting involved. We've also seen recently, we did an article on it on small caps where Chinese central bank, I think they've got like 94 patents or 92 patents now on a digital currency that they're looking to bring in. And there's a lot of discussion. Like I know Vladimir Putin's met with Vitalik Buterin, I think his name is, that developed the Ethereum cryptocurrency, which is, I guess, the second most popular to Bitcoin. And they've been looking at it as well. And this is one of the predictions I've got going forward, is that physical currency is going to get phased out. And it's all going to get replaced with some sort of digital blockchain-based currency, but it'll be owned by the banks. But how would it be different, like in terms of Bitcoin? Like as far as I'm aware, it's all open source, right? Whereas potentially these ones won't be. Or like, you know what I mean? Like, do you see in the future potential like Bitcoin and these other currencies may compete with the fiat currency?
Yeah, I think there'll be alternative choices. So, in terms of some of the other countries out there, Vladimir Putin came out and was asked by somebody in the audience, do you think Russia will have its own cryptocurrency? And he gave one of the most eloquent answers in that we would never have our own cryptocurrency because that has a non-sovereign issuer, whereas we would be our own issuer, have our own central bank. So it would be a central bank-backed digital currency. So he understood exactly what the difference was between the two, digital currency and cryptocurrency and central bank issuance. So that probably gives you the greatest insight into the minds of those that are considering launching their own digital currency as something to protect their own monetary value and their own currency system. China's coming out with their central bank-backed digital currency, and they already have their one belt, one road plan, which is around funding other countries globally, getting access to infrastructure there as well, so they can own assets and be able to transact using the Chinese yuan, and not having that, I guess, fall to significant devaluation, which is what maybe the US is trying to achieve at the moment. So sort of opening up these payment corridors for extremely low friction payments, as well as having that reserve currency of choice, is something that I think means central banks are going to have to look to digital currencies going forward to be able to compete globally. In terms of how Bitcoin sits on that, well, that these digital currencies from a central bank have their own issuance schedule based on those that are in control of the country, and it's designed to prop those economies up. So whether that's the case, they need the current currency lowered so they're more competitive export wise, or whether they're in a position of strength to help fund operations in the country. That's probably up to the country's economy at that given time. But Bitcoin, that schedule, it won't be debased at any point. And if you've got debasement happening in other currencies, you should see appreciation for Bitcoin over time based on that. So there's definitely a difference, and I think Bitcoin isn't really trying to replace those currencies. It's something that I think is complementary as part of it, and I think not moving to a digital currency over time is really going to cause the currency to get written off faster than typical. I mean, the average reserve currency lasts about 100 years, and the US is sitting on their 100th year right now. So a pretty important period in terms of the life of central bank issued currency, I think, with all these global governments looking at how they can get involved in issuing their own digital currency.
Yeah, it's definitely interesting that you mentioned that the fiat currencies have that lifespan, and we're pretty much at the end of that now. I think everyone was, me included, was thinking it was going to go back to precious metals. But if you look at the charts in recent times, it's almost like cryptocurrencies now become the lead for the precious metals. So whether precious metals becomes the store of wealth and the Bitcoin and the blockchain allows you to kind of transfer the money, maybe that's, I know that's something that a few countries have been looking at. I think China was potentially looking at that with a gold-backed currency.
That's right.
That's one of the things where, I guess, in terms of gold and silver, people are saying, well, you can't walk around and you can't travel with it. But if you kind of combine the best of both worlds, you could probably do it, right?
Absolutely. And that's what we're actually trying to achieve with a product called X Bullion, which is from a business, Bullion Asset Management. Full disclosure, we're an investor there. That is applying blockchain and digital ownership to physical gold bullion. Because, it's, as you said, difficult to carry around with you and transact with. It's also a bit of a cumbersome process to acquire. So you may have significant margins, you may be going through multiple intermediaries, and then you also might have higher fees as well. So what this does is allows access to wholesale refinery rates of gold, so spot rates, and then to have extremely low costs of custody each year, and extremely low cost of being able to transfer that anywhere in the globe. So I think it's just a smarter way of having audited, insured gold ownership, and potentially something that could be used as a transactional currency. But that's something to wait and see as well, if that sort of takes that over. But in terms of that store of value, I think gold does a pretty good job. But I also think you've got different audiences. So gold stood the test of time over 5,000 years, has a lot of institutional investors that see it as being a great portfolio hedge. It has, I think, an older demographic that, has got a lot of comfort with it. But if you speak to younger investors, they see Bitcoin as fulfilling that gold value proposition. That's why it's referred to as the digital gold. And that's why we see such a high concentration of ownership in the younger investors with Bitcoin, over what gold was traditionally seen as. And as millennials are growing older and having a greater income and receiving, more wealth from their parents and grandparents, I think that that movement towards Bitcoin over gold should continue to come through. It's only around 1% of the value of gold right now, Bitcoin. So if it does continue to hold that trend, then there could be a lot of upside.
Yeah, absolutely. And not that this is financial advice, but let's say there's someone listening right now that's like, all right, maybe I want to dip my toes in the water and, pick up whether it's a Bitcoin or get involved with your app. How would you go about that? What's the one way they could do that?
In terms of buying Bitcoin through DigitalX, we actually have a fund that's designed to track the price of Bitcoin. It's available for qualified investors only. So that means you're either institutional or high net worth, sophisticated investor by the Australian Corporations Act. And that is able to get access to wholesale Bitcoin rates, as well as insurance through BitGo. And it combines some of the professional service firms that we've selected over our 7 years in the market. So it's independently audited by BDO. It has independent administrator and trustee, has access to custodian as well. So we have, a pretty extensive experience and history of holding Bitcoins ourselves, but wanting to appeal to this audience, we know that we wanted to have the same sort of professional service firms and independence as what these investors are used to. And that's how we've created it. So if you are looking to acquire Bitcoin and want to have titled ownership over Bitcoin exposure, this is the best way to do it in Australia. And you can buy that through reaching out to me or coming through the DigitalX.fund website. In terms of buying, smaller purchases of Bitcoin, some great platforms out there are probably CoinJar, Independent Reserve, Mine Digital, and BTC Markets. There's an industry body called Blockchain Australia which has a code of conduct for certifying exchanges. So a really good way to understand, which exchanges in Australia have the best customer protections is to have a look which exchanges are currently certified and going through that audit process. And that'll give you a lot more confidence of interacting with those exchanges, because we do know that they have had a checkered past in terms of exchanges of hanging around for the long term. Over 50% of the exchanges that I've known in my period in this market, they're no longer here. So it is something that I guess the industry says, not your keys, not your Bitcoin, which really means that don't hold your Bitcoin on exchanges because there are risks from doing so.
Right, I think I need to speak to you after about that one, because I got a warning today about that. But yeah, I guess that's one thing that did frighten a lot of people off. Like going back, I think there was the Mount Gox. Was that an exchange that went down? Is that an example of that, or what?
That is exactly right. That was the biggest one. That was early 2014. The cracks were appearing there 2013. I remember actually trying to get an account there in that sort of period before they'd gone under, and their customer service was pretty poor. And being from a sort of stockbroking background and dealing with professional firms, I remember emailing them saying, "This is the worst customer service I've experienced. You've lost me as a customer. I'll never be coming back," and not interacting with them anymore. So that was thankful for me, obviously, for avoiding that drama. But that is one that has caused the industry to have a fair bit of pain. And I know that there's a process going on at the moment to distribute those coins, or a portion of those coins, back to the original investors. But we're talking 6 years later. So on the positive side, if these exchanges have a problem, do go under, it could take 6 years to get some of your money back anyway. So it has been an issue for the industry in the past. But I do think that there's a lot of work being done by industry bodies like Blockchain Australia to help sort of improve the qualifications and the processes that exchanges run. So they're a lot better now than they used to be.
Yeah, absolutely. And just speaking of blockchain, like, I mean, you're talking previously about how the ASX is going to start using the blockchain for their clearing and things like that. What do you foresee as the future? Like, if we fast forward a few years from now, how do you see, blockchain technology or cryptocurrencies playing their role? Because it seems like that momentum's only building.
So in terms of how I see the market sort of changing over the medium term, the ASX example of rolling out that digital asset holding infrastructure called DAML, and the first application being settlement and clearing, I think that's really important. It's because 2,200 of Australia's largest companies are all going to be using the same infrastructure. And if their professional service and finance partners start using that as well, that's probably another couple of thousand. So you're suddenly talking about, almost 5,000 businesses across Australia that are all using one common shared technology. So if you're trying to transact, with Coles, Toll Group, maybe a major port, they can all currently, send each other a digital invoice over email, track the orders using their existing sort of ERP systems, or maybe it's an Excel spreadsheet, issue invoices, make payments, and all these sort of separate systems then have to reconcile daily. And that adds significant cost and complexity to what's happening. But if these invoices can be issued on that same infrastructure, if that order can be then tracked using the same common shared infrastructure, and if payments can be made instantly over that infrastructure, that's something that's going to change the market very quickly.
All right, Leigh, so it looks like there's a lot happening in the space, and obviously DigitalX is involved. Can you tell us a little bit what you guys are up to and what you've got coming up?
Yeah, definitely. So we think digital assets are looking quite strong at the moment. They've got a big tailwind behind them with what's happening with global events in terms of QE, in terms of financial infrastructure that's currently under pressure, and that's seen a Bitcoin price that is starting to look quite positive. And it's now a year that we're sitting. We'll be going past the halving, which is obviously historically been very bullish for Bitcoin. So it's about offering access and exposure to DigitalX and digital assets through our investment funds. So bringing more investors through that pipeline, offering them exposure to these exciting asset classes. And then on the consulting and development side, there's a couple of things that are really interesting for us. The first one is allowing enterprise, so large businesses throughout Australia, access to blockchain technology to take advantage of some of the opportunities within that. So providing them with the right infrastructure to use and enabling them to access that to solve some of their business problems. And from a product development point of view, there's a number of different products that we're considering at the moment that could really offer some great solutions out there. So I think the obvious one is what ASX is doing, rolling out their DAML infrastructure. There'll be an environment there for fintech companies to build products that can service 2,200 of Australia's largest customers and enabling the aggregation of that data. I think that's really what we're seeing as being quite equivalent to when open banking came to Australia and neobanks got that opportunity to come through. That'll be happening with data and share market data coming forward very soon. On the gold side of the market, we've seen how that's been very strong for a lot of the ASX businesses. We do have that gold product coming through Bullion Asset Management. That's looking to launch very, very shortly, going through sort of a soft launch period at the moment. So I think that's something we're pretty excited about delivering into the marketplace in this gold environment, and being a really strong example of how blockchain can bring lower costs, less friction, and more access to an exciting asset class.
That's great, Leigh. And what I'll do is I'll put a link down below if people are watching this on YouTube. Otherwise, if you go to digitalx.com is your website, Leigh. Is that right?
Yeah.
Yep.
Yeah.
Yep. So if they want to get in touch and have a chat with you, just head on over and contact Leigh. Now we've got the halving coming up, and I'm just checking the Bitcoin price now. So we've got something next time we have a chat. We'll see how we're looking. But at the moment, it's $9,268 US. So let's see how we go after this halving, and maybe down the track when if it gets to 100,000, maybe we'll hop back on, or we'll see where things are.
That'd be pretty good. So I think don't necessarily expect a big surge the week after the halving or straight into the halving. What we've seen previously is that over the subsequent year, the real sort of supply, or the lack of supply, starts to take an effect, and the high has seen something like on average 350 days post that original halving period. So if history is anything to go by, it's not necessarily a short-term quick trading event into the halving. It's really about seeing what the lack of supply does over that sort of medium term, if you will. I think 1 year in Bitcoin or digital asset environment is probably the medium term. So that's probably where I would be looking at it, rather than trying to jump in for a short-term trade in what is a pretty volatile asset.
Yeah, we probably should make that very clear, just in case. Like, as much as it could go up that much in price, it could go down just as quick as well. It's a very volatile asset class, but I think it's as you were saying earlier in our discussion, like as these bigger companies are starting to use it and understand it, it's going to eventually find a bit more of a not as volatile. Actually, compared to oil, it's pretty it's pretty conservative, right? So I think going forward,
that's right. You don't have to pay anyone to take Bitcoin off your hands like you had to do with oil last week. So that's definitely one thing going for it. Being a digital asset, you don't have those storage costs, and you're not selling for a negative.
No, absolutely. Who knows? In the future, it might be as conservative as gold. So, thanks for educating our listeners today on the space, Leigh, and we look forward to getting you on in future and running us through what's happening in the market and what's happening with DigitalX.
Thanks, Philip. Great to chat with you. Cheers.